have I got myself into? All right. The ultimate guide to old age security for Canadian expats. This is it. If you're watching this, you are probably a Canadian dreaming of living, working, or retiring abroad, partially or permanently. And whether you were born in Canada but dream of the sun in some distant, faraway place, or you were born outside of Canada and immigrated here and now are dreaming of returning back to your home country or somewhere else, there's one Canadian financial retirement pillar you absolutely must understand before you go, and that is your old age security pension. The rules for receiving your OAS outside of Canada can be complex, and what you don't know can cost or aggravate you, and then your time spent over tapas is more about complaining about your taxes or the rules instead of enjoying your dinner. Now, my name is Serge, and I'm a certified financial planner professional since 2010 in Ontario, Canada, and I research and create this content not just for you, but also for me as I navigate my own personal journey in deciding snowbird or expat when I retire. I spend the hours on research to get you the clear, unfiltered facts and providing it to you so you can build your knowledge bit by bit, just as I am. Now, I encourage you to visit the links I provide in the detailed description to see the rules for yourself, but I also create these videos so that you can get the information first and then confirm. For this video, I logged over 10 hours of research, editing, and creation of the tools that I'll be sharing with you, and I'm going to be giving you a complete workshop on everything you need to know to protect your old age security and make your move with financial confidence. Now, this might be a long video, so I have created chapter segments for you to locate a specific piece of information, but I do encourage you to watch it all the way through for a couple of reasons, actually 3 reasons. First, you won't miss any information that may be relevant to you that you did not know about. Second, I've condensed hours of research into a much shorter investment of your time. And third, well, by watching from start to end, it does help me to create more valuable content as, YouTube might descend to throw me a few pennies here and there. Before we dive in, one important reminder. Even though I am a certified financial planner, this video is for educational and informational purposes only and does not constitute personalized financial advice. The rules obviously can change and your situation is unique. So please consult with a qualified professional who can assess your individual circumstances. And if you don't have one, a great place to start is the search tool on the FP Canada website. And I'll have a direct link to that in the description below. In fact, I'll be also releasing a short how-to video to walk you through using that tool to find a qualified planner in your area. All right, let's start at the beginning. You can receive your first old age security pension payment the month after you turn 65. For 2025, if you turn 65 in April, your first payment could be May the 28th, based on this handy benefit payment dates list on the Government of Canada website. The good news is, for many Canadians, Service Canada will automatically enroll you. You'll receive a letter in the mail the month after you turn 64 letting you know. However, if you don't receive that letter, or if you're already living outside of Canada, you will need to apply manually. And if you apply after your 65th birthday, well, Service Canada may be able to give you up to 11 months of retroactive payments. Now, this is a key detail for expats. If you are applying from outside of Canada, you must use a paper application. You'll need to complete it and send it to the Service Canada office in the last province or territory where you lived. Now, I know that dealing with government forms can be intimidating, so I'm going to be releasing a separate short how-to video soon where I'll share the application form on the screen and walk you through the key fields you need to fill out and provide the list of mailing addresses for each provinces as well. It will be a quick, practical guide to take all the guesswork out of the process, so be sure to subscribe so you don't miss that. Now, for a pro tip that many people miss, You actually don't have to take your old age security at 65. You can voluntarily delay your first payment for up to 60 months or 5 years until you turn 70. For every single month you delay, your payment will increase by 0.6%. For example, delaying for 1 year means 7.2% permanent increase in your monthly payments. If you wait the full 5 years until age 70, your pension will be 36% larger for the rest of your life. Of course, this is for people that are staying in Canada, but I think it's still something interesting to know so you can see what the actual numbers are. Now, what does it actually look like in actual numbers? To give you a real-world picture, I use the government's online estimator tool, and assuming you have the full 40 years of residency, here are the estimates. Of course, I'm recording this in August 2025, so these numbers will change with inflation. So at age 65, the maximum right now is $734.95 a month. If you wait just 1 year to age 66, that jumps to $787.87. At age 67, it's $840.78. At age 68, it's $893.70. At age 69, it's $946.62. And if you wait the full period until age 70, that monthly payment comes in at $999.53. As you'll see on the screen, that's a significant increase. Now, if you're watching this at a later year, other than 2025, be sure to look for my updated video on this topic, which will have the year in the title. After age 70, there's no advantage in delay. In fact, you risk losing benefits. So, one crucial note, if you are eligible for the Guaranteed Income Supplement, there is no advantage in delaying your first old age security payment. So to do this, if you've received an enrollment letter, you can either sign into your My Service Canada account or simply sign and return the letter by mail. Now, to get any old age security at all, you must have lived in Canada for a minimum of 10 years after the age of 18. To get a full pension, you need 40 years. And you have to be a legal resident or Canadian citizen also, I should add. It's also helpful to know that for OAS purposes, a year of residence is counted based on periods you lived in Canada. Short absences like vacations generally don't affect this, and the time spent working abroad for certain Canadian employers, like the Armed Forces, can also count as residency in Canada. But here's the single most important rule for anyone planning to live abroad, the 20-year residency rule. So to collect your old age security payments while living abroad, you must have lived in Canada for at least 20 years after you turned 18. If you have less than 20 years and leave for more than 6 months, your payments will be suspended. But what if you're a few years short? This is where a vital tool comes into play: Social Security Agreements. These are international agreements between Canada and another country that are designed to coordinate the pension programs of the two countries for people who have lived or worked in both countries. Canada has these agreements with over 50 countries, so if you lived in one of these countries, you may be able to use your years there to help you meet the 20-year requirement. But remember the crucial detail: these foreign years only help you qualify to receive the payment. The actual amount of your old age security is still calculated based only on the number of years you were living in Canada, which is your years of residency divided by 40. So, how much can you expect again? Well, the payment amounts are adjusted quarterly for inflation. As of mid-2025, the maximum monthly payment for someone aged 65 to 74 in that range is $734.95. For seniors aged 75 and over, that amount is higher at $808.45, and that's because the old age security pension was permanently increased by 10% for seniors 75 and over back in July 2022. It's critical to remember that these are the maximum amounts for a full pension. So if you are receiving a partial pension, you should not use these tables. Instead, you can get a good idea of your specific amount by using the government's Old Age Security Benefits Estimator tool, which takes about 5 to 10 minutes to complete. And just like the application form I mentioned earlier, I want to make this as easy as possible for you, so I'll be releasing a short step-by-step video where I'll share my screen and walk you through using the estimator button by button, page by page. So again, make sure you're subscribed, and we'll be building a whole library of these practical how-to guides to support your journey. Now, let's talk about taxes and the clawback. The official name of this is called the Old Age Security Recovery Tax, and it's a system designed to redirect benefits from seniors with a higher income to those who need it most. The tax is calculated based on what the government calls your net world income. This is a crucial number to understand. It's the total of all income from both Canadian and foreign sources like employment, business, pensions, social security, and investments, minus any allowable deductions. And a key point, you calculate this income before any tax has been withheld. Now, if your net world income is higher than the threshold for the year, the recovery tax will be deducted from your monthly old age security payment. So in 2024 income year, that's last year, that threshold was $90,997. For example, if your income in 2023 was $96,000, the threshold was $86,912, you would have to repay 15% of the difference. To manage this, every January you will receive an NR4 information slip and an Old Age Security Return of Income form, and this package is mailed to you. But if you didn't receive it, it's still your responsibility to get the form from the CRA website and file it on time. You must complete this return and send it to the CRA by April the 30th. This is non-negotiable. If the CRA does not receive this form, your old age security payments could be stopped beginning in July. On top of that, if you file your return late or have a balance owing, the CRA will charge you penalties and interest. However, there is one major exception to filing this form, and this is a big one. It's based on the tax treaty Canada has with your new country of residence. I'm going to put a list on the screen right now of the countries that have this special agreement. According to the Government of Canada, you do not have to file the form for the year if you meet all of the following conditions. First, you were a resident of one of the countries on this list at the end of the year. Second, you received an old age security pension during the previous tax year. And third, you don't have plans to move to a country that is not on this list in the near future. This means that if you live in a country like Romania, Spain, Portugal, Mexico, the United Kingdom, or the United States, among many others on this list, and you meet those conditions, you are exempt from filing this specific return. And this is a huge piece of administrative relief. Now, in addition to that main list, there are a couple of other very specific exceptions to be aware of. For example, you don't have to file the form if you were a resident of Brazil and are a Brazilian national, or you were a resident of the Philippines and the total of your Canadian pensions for the year was Canadian 5,000 or less. The key takeaway here is that tax treaties can and do get amended, so it's always a good idea to verify the certain rules, the current rules for your specific country. Of course, I will have a direct link to this full official list in the description below. A few last crucial points. Now, the Guaranteed Income Supplement, or GIS, is for Canadian residents only. Your eligibility stops the moment you leave. The same applies to the allowance and the allowance for the survivor, which are related benefits for low-income spouses or survivors aged 60 to 64. For the old age security payments you do receive, the best way to get your money is via direct deposit. The Government of Canada offers this in many countries around the world, but be prepared, however, as it can take approximately 3 months for the first direct deposit to be processed after you enroll. Now, your old age security is just the first pillar of your retirement income. The second pillar is your CPP, or Canada Pension Plan, which has its own separate set of rules for living abroad. If you found this workshop valuable, you will definitely want to watch the video I'm releasing next week on the CPP, so make sure you're subscribed so you don't miss it. And, I'd love to hear your plans. Let me know in the comments which country is on your current radar. Thank you for watching. Don't forget to download your free Old Age Security Handbook with all the key takeaways, official links, including the benefits estimator, the list of the countries allowed direct deposit, and I'm going to try to figure out how to put it in the description below, but for now, I'm going to be uploading it to the documents section of my Facebook group under Canadian Expats, where we're growing a community. If you want to join there, and you'll be able to download it from there. In the meantime, until I figure out how to make a link to get you to download that document. I'm Serge from Canadian Expats, helping you make your move with confidence.